Hello everyone, welcome back to the channel Noble Wealth. So today we are going to talk about something very important in finance. We will be discussing about the income statement. So here's what we are going to cover. We will be talking about what exactly is an income statement. Then we'll take a small example for better understanding. We will also discuss about the main components of income statement. Then we'll also look at a real life income statement from a company on screener.in. And finally, we will be talking about why it is used and why you should care about it. So let's jump in and understand what is an income statement. Now, think of it as the business financial report card that tells us about how much a company earned, how much it spent, and whether it made a profit or loss during a specific time. It is also called the profit and loss statement or P&L statement. And this isn't just a number formality. It's what investors, banks, and business owners look at to understand if the company is doing well or not. Now, let's take a small example to understand it better. Imagine your father owns a stationery shop. From January to December, you note down all the earnings and expenses. Now, suppose he sells goods worth rupees 10 lakh, and that's his revenue or sales. But he also spends 7 lakh rupees on buying stocks, paying rent, salaries, electricity bill, etc. And all these things comes under his expenses. So now what is left? That is going to be his net income or net profit, which is 3 lakh rupees. So to calculate the profit, simple math, subtract expenses from sales. This is the core idea behind any income statement. So let's move on to the main components of the income statement. As you can see, we have revenue or sales. This is the total money earned from selling products or services. Then we have cost of goods sold, also known as COGS. This is the direct costs of producing or buying the products sold. Then we have gross profit. Gross profit is calculated by subtracting COGS from revenue, and it shows how much is left after covering the cost of goods. Then we have operating expenses. This is the cost related to running the business, like rent, salary, marketing bills, etc. Then we have operating profit, also known as EBIT. EBIT stands for earning before interest and taxes. Now, to calculate the operating profit, we subtract operating expenses from gross profit. There is another way to calculate operating profit, which is revenue minus, in the bracket, COGS plus operating expenses. Then we have other income. This is the income from outside the core business, like interest or dividend. Then we have interest. So now suppose if a company has taken a loan, it has to pay interest on. Then we have depreciation. Depreciation is nothing but a reduction in assets value over the period of time. Then we have profit before tax, also written as PBT. The profit a company earns before paying income tax. Then we have tax that needs to be paid to the government. And finally, we have net profit or net income. This is the company's final profit after all the incomes and expenses. And how do we calculate net profit? We subtract interest and taxes from operating profit. Now, let's take an example of a made-up company, ABC Private Limited, whose income statement for financial year 2024 and 2025 is shown. So as you can see, we have revenue or sales of 10 lakh rupees, and cost of goods sold is also mentioned, 5 lakh rupees. Now to calculate the gross profit, we subtract COGS from revenue. Then we have operating expenses of 2 lakh rupees. Now to calculate the operating profit, we subtract operating expenses from gross profit, which comes to 3 lakh rupees. Then we have interests and taxes. Now we subtract interest and taxes from operating profit to get the net profit or net income, which comes down to 1,80,000. Now let's take a P&L statement of Bajaj Auto from screener.in, and this is how your profit and loss statement of Bajaj Auto looks like. So as you can see on the top right, it is a consolidated figure in crores. So all these figures mentioned over here are in crores. So as you can see, we have sales, we have expenses, we have operating profit, then we have OPM, which is nothing but operating profit margin, which tells you how efficient the company is. Then we have other income, interest, depreciation, profit before tax, tax in the conversion is in percentage over here. Then we have net profit. So going forward, I will also be making a detailed video on P&L, and we will be discussing all these things. But as of now, since we have discussed the main components of income statement, I just wanted to show you how it looks like in real of from. So even if you guys want to have a look, you can just go to screener.in and type any company's name and you will find it there. So now let's talk about why is the why is the income statement used? Let's talk about it. It helps us understand a company's financial performance. Investors also use it to decide if a company is worth investing in. Used by banks to check if the stability before giving loans. Then companies also use it to track where things are going wrong, like if expenses are too high or profits are falling. In short, it's a powerful tool, not just for accountants, but for anyone interested in businesses or investing. So now you know what an income statement is, what the key components are, how to read it using Screener, and why it is actually useful. If you found this helpful, hit that like button, subscribe to the channel for more easy to understand financial content, and drop a comment which financial statement should I explain next. Thanks for your time. Keep learning and keep growing. See you in the next one.